and yada, yada, yada. But first, we got to go through this. Bitcoin falls below 40K as death cross looms and price charts. The past record of the death cross as an indicator of deeper drawdowns is mixed. So they call it Bitcoin's death cross, a bearish indicator which appears when the 50-day moving average dips below the 200-day moving average. The ominously named chart pattern looks set to be confirmed this week amid mounting concerns of faster liquidity withdrawal by the U.S. Federal Reserve Fed, a bearish development for Bitcoin and asset prices in general. On Monday, the Bitcoin price fell below 40,000 for the first time since September 2021. As of press time, the largest cryptocurrency was changing hands at 39,853 based on CoinDesk pricing, down 12% so far in 2022, one of the Bitcoin's worst ever starts to a year. The Wall Street firm Goldman Sachs foresees the Fed raising borrowing costs at least 4 times by the end of 2022 versus the previous prediction of 3 rate hikes. Now they're talking about 4 rate hikes, according to Goldman Sachs. The investment banking giant also expects the central bank to downsize the balance sheet from July. Friday's U.S. labor market report, which showed that unemployment rate dropped to 3.9%, has strengthened the case for the Fed to hike rates concurrently with the end of asset purchases in March. According to the CME Group's Fed Watch tool, investors were pricing a 73% probability of a 25 basis point rate hike in March, up from 61% last week. Fears of a hawkish Fed gripped the Bitcoin market towards the end of last quarter after the central bank shifted its focus to inflation control from maximum employment. In December, the Fed announced at least 3 rate hikes by the end of 2022 and an end of the asset purchase program for March. Bitcoin peaked near 69K on November 10th and has declined nearly 40% since. The cryptocurrency slipped over 12% in the last 7 days to January 9th, registering its biggest weekly drop since early December. The impending death cross, coupled with the sourcing macro outlook, may bolster overall bearish sentiment. That said, the technical indicators past record as a predictor of bear markets is mixed. According to the research by Kraken, many of Bitcoin's previous death crosses, including those seen in 14 and 18, coincided with either a sell-off in the days that followed or a continued macro downtrend that confirmed a bear market. However, death cross witnessed in June 2021, March 2020, October 19, were bear traps or false signals that, and we talked about the one in June, that marked major price bottoms. The consolidation seen after the mid-June 2021 death cross resolved in a fresh bull run is seen in the featured image, or did it start a fresh bull trap? A bull run and bull trap is very, very different. And a bull trap, when you hit those all-time highs and get into discovery, you take farther than you started. So moving averages, crossovers are unreliable as standalone indicators, given they are based on backward-looking data and tend to lag prices. The market is often oversold due for bounce by the time the crossover is confirmed, as was the case in June last year and the late March 2020. So that was one I wanted to read. And then let's get into the charts real quick, and then we can talk about these technical indicators. Ripple investors are facing challenges, market conditions as XRP offers consolidation. So let's go to here, and then we're going to have this bounce off. That's why I wanted to come on I couldn't come on right when it was at 39,500. I watched it. I wanted to try to find a spot where we were going to roll up and try to retest old resistance. Like I said yesterday, XRP had one more chance on the weekly to get up to 80 cents last night. When it didn't happen before the flip, we told you that we were going to have a very volatile swing, and you need volatility to have these numbers come down. Now, after we do the intro, we're going to read and we're going to discuss about what's going to happen with the future of these coins right now in the immediate short term. It was vital for us to read that Bitcoin article, vital for us to let this market play out for the first few minutes while we were on, and vital for us to get on the same page. Make sure to hit that like button. I really appreciate each and every one of you. This community is growing extremely fast, and it's an honor and a privilege to lead us in the right direction. Okay, everybody, I appreciate you hitting that like button. So Bitcoin's at 40,856. We're going to let this round around for a second. We'll read this XRP technicals and up to the minute MACD and stuff like that. But as I told you guys yesterday, the day before that, and the day even before that, I thought we were in a bearish continuation pattern. This would continue to the downside. Right now, we have 69.853 low support. We got to move it down from 7077, which is a tremendous sign. Our next drop should be 64.8 and then 57.6 after a slight reversal. Because what I should have done when I first started, when we were starting to flip up, I should have put it into the 5 and let you guys see exactly what was going on. So we broke down, hit this support. Now that we've created at 69.853, now we're trading between here. We're trying to get to here and ultimately to here. We've been talking about this for days and even weeks, especially the last 2 weeks, about this bearish continuation and the pattern. This is nothing more, like I said yesterday. Go back and watch my videos. They were spectacular. It got tight, and I said it was going to be nothing more than continuations. And then I even said you could do a continuation down, bounce, and then stick around here for a minute and then come down. But it's tremendous to see that we hit under 70 cents. We broke that support, that wick of 708, which is what we needed. So now it's confirming even more that we're about to break down even faster and harder. So, but, you know, there's always spots of instability. Yesterday with Bitcoin, I was on here profusely talking so that we could see, and I even brought down 38,056. You know, and we talked about, could it come down there and create an arm, or would it come down to 34,156 and try to bring an arm? But we talked about, would this even look right? And we talked about these points. You're going to have to watch yesterday's video to see exactly what all this means. But we were talking about, does it have to break down to 38,000, then bounce up? Or were we seeing that tip of like an elbow? Is that big enough for a right shoulder? It's very tricky. So all we need to know right now is Bitcoin came down and touched that 39,590 support absolutely beautifully. I'm the best in the business for a reason. I mean, look at that touchdown. That was a targeted zone I've had. We just didn't know if we were going to hit 39,590, if we are going to come down to 38.9 or finish off at 38,056. So far, we hit 38,000 or 39,590, and now we're coming back up to 41,000. Likely, what we did was we tried to retest these lower moving averages, and we tried to get back up to 41,979, but we haven't had the strength because we're starting to reverse back down. The 3 minute is likely what's going to cap any upside here.